Welcome back. Today I'm going to be showing you the strategy that I use to pass FTMO with a 60% win rate. So let's get right into it. First of all, I'm just going to put the certificates up on the screen, and I'm also going to put my equity curve there as well so you can see that. Now for the first phase, which is the challenge that has a 10% profit target, I won 13 trades and I took 9 losses. If you go and work that out yourself if you want, that is a 60% win rate. And then for the verification stage, which has a 5% profit target, it was the same. I won 6 trades and lost 4, which also works out to be a 60% win rate. And that shows you that over the course of me taking the challenge, the strategy provided me with a very consistent win rate. So let's get into the actual strategy, and I start with the higher time frame target. So I'm simply going on the higher time frame like the weekly or the daily and looking to see is price forming a bullish leg like this, or is price forming a bearish leg. Okay, now whichever one that is, bullish or bearish, I know that price is only ever going to be targeting one of two things. That's either external or internal range liquidity. Now internal range liquidity is an inefficiency, right? So a bullish FVG or a bearish FVG. And external range liquidity is an old high or an old low. So it'll be like this old high up here, or I'll be targeting this old low down here. Okay, they're the only targets that I'll ever really use, and I'm simply looking to trade in the direction of either of these. So even if the higher time frame is bullish, I can still catch this retracement leg to target the internal range liquidity, and even if price is bearish, I can still catch this retracement leg to target the internal range liquidity there. Now these price legs are most likely going to be on the weekly or the daily, which means when I'm looking to catch the move, I'm actually waiting for price to build order flow towards the target. So let's just say, for instance, I'm looking to catch this move here towards the external range liquidity. Within that price leg, I want to see the 4-hour build some kind of bullish order flow before I look for a trade, right? So I want the 4-hour or the 1-hour to start building order flow. Okay, let me just label this quickly. And the same goes for the retracement leg. So let's say I'm looking to catch this retracement into the internal range liquidity. I'm still looking for price to build 4-hour or 1-hour order flow towards that before I engage. Okay. And the reason for this is that the 4-hour and the 1-hour are what govern the intraday, right? They're the intraday timeframes, and I am an intraday trader. So I want to make sure that I'm in line with those timeframes. And as for asset selection, my main assets are Euro USD, gold, and indices. Those are the main pairs I'll trade. So before every session, I'll go onto each asset, flick through them, and try and find one of these clear internal or external range liquidity targets. If I can't see that, then I simply don't trade that asset and wait for it to be more clear. Now, this is a very overlooked process, but it is the key to consistency. If you want consistent results, you want to be taking your trades within consistent higher time frame conditions. So I'm going to show you a few examples of this, then I'll get into how I actually trade on the intraday. So we'll start on gold here, right? If I zoom out a little bit, you can see on the daily, price is extremely bullish, right? We're definitely in a bullish trend. But price has actually taken out this old high, which as we know is external range liquidity. And after taking external range liquidity, price can return to internal range liquidity, which would be an FVG. So we have this daily FVG here. But just because now I have the internal range liquidity target and I think it's going to go there, I'm not just going to start selling randomly. I have to wait for price to build that bearish order flow, right, on the 4-hour or the 1-hour, and then I can look to get in. That drawing is disgusting, by the way, my bad. So then if we go on to the 1-hour, we can look for that confirmation. And you can see that these last bullish candles got closed beneath very aggressively. This formed a bearish order block. Now, once price starts forming and respecting bearish PD arrays, I know that the order flow is bearish, right? Which means that this 1-hour time frame, which is an intraday time frame, is now in line with my internal range liquidity target, which gives me confidence as an intraday trader to look for this move to continue lower. And if I play it out, you can see that that order block was respected and price targeted the internal range liquidity. So let's look at an external range liquidity target, and then we'll get into the intraday stuff, right? The really exciting stuff. So here on the weekly, on the dollar index, price is moving to the downside, okay? We've had a retracement into this bearish order block, okay? And now I would anticipate a move lower to target this low down here, right? And what do we know about old lows? Well, old lows are external range liquidity, okay? So we have a clear external range liquidity target, but we need bearish order flow to be forming towards that before I engage. So then if we jump down onto the daily, right, you can see that moving away from the order block, we had a very aggressive bearish candle, okay? And this has actually formed an inverted fair value gap, right? We've disrespected a bullish array and formed a bearish one, right? This is a bearish IFVG. So after forming that, I'm confident that the daily is heading to the downside. Then looking at the 4 hour now, because it's a very important intraday time frame that I'm looking to be in line with, you can see that price formed this bearish order block here by closing beneath this last up candle, which tells me that the 4 hour is in a sell program, so it's bearish, which means now price is in line, and I'm happy to engage with price and see it target this external range liquidity. So again, this is the type of move that I'm looking to catch, right? Once price is very clearly going towards external range liquidity with either the 4 hour or the 1 hour in line. Now, if you've been watching this channel for a while, you'll know that I have a free Discord where I call intraday price movements, so the lower time frame stuff. But I actually also call out my higher time frame predictions. So stuff like this, I also put in the free Discord before it happens. So if you want access to that completely for free, the Discord invite link is going to be the top link in the description. So once we have that higher time frame bias, we actually need to catch the move. And to do that, we need to be able to time the expansion, right? When is price actually going to expand towards that target so I can get in on the move? And to time the expansion, I use something called daily cycles. And basically they're frameworks that are made up of Asia kill zone, London kill zone, and New York kill zone, which tell me when price is going to move towards my target. So if you don't already know the kill zone timings, I'm going to give them to you because it's very important. So London session is 7 a.m. to 10 a.m. Greenwich Mean Time. So this is UK time. New York session is 12 p.m. to 3 p.m. Again, Greenwich Mean Time, UK time. And then Asia session is 1 a.m. to 5 a.m. Okay, again, GMT. Those are the timings for the kill zone. So I recommend you get a kill zone indicator so you can use what I'm about to show you. So screenshot that, and now I'm going to tell you about daily cycles. There are actually 8 different ones that I personally use, but for the simplicity of the teaching, I'm going to show you 3 of them, and then I'm going to show you some examples. Okay, so this first daily cycle I'm going to be teaching you is called London protraction. Okay, and it involves London kill zone and Asia kill zone. So we'll start with the bullish option. Okay, so essentially what you're looking for, if you're bullish, you have a bullish bias, is for Asia kill zone to consolidate and build up some kind of liquidity. So some kind of equal lows, an old low. It doesn't really matter what type of liquidity. You just want Asia to be a bit choppy and not really do much. And then you're going to wait for London kill zone to start. So that's 7 a.m. to 10 a.m. period. And you're going to wait for London kill zone to sweep out Asia's low. Okay, so you want London to take out Asia's low. Once that low is taken, you can be very confident now that London is going to expand in the other direction towards your bullish higher time frame target. So once price is taken out, down here is where you want to get your entries, and I'm going to show you my entry model after I show you these daily cycles. So once price takes out Asia's low, you're going to look for your entry down here, and then if you have a clear higher time frame bias, price should run towards that for the rest of London session. And the same goes if you're bearish, right? So let's say you have a bearish higher time frame bias, you're going to be looking for Asia session to consolidate and not really do much, be a bit choppy, and just build some kind of liquidity, okay? Some kind of old high, equal highs, it doesn't really matter. And then you're going to wait for London session to start. Wait for London kill zone to open and run above Asia's high, right? So you're looking for Asia's high to get swept out by London kill zone. And then again, up here is where you'll get your entry, right? You'll look to get into a position to sell, and then from there, if you have a clear higher time frame bias, London kill zone should impulse to the downside towards that target that you have. Okay, so the second daily cycle I want to go over is called New York continuation. Okay, so again, we'll go over the bullish and the bearish variants. So let's start with the bullish version. Let's say that you have a clear higher time frame target up here. Okay, now to play this New York continuation, what you want to see is London impulsing towards your higher time frame target, but not quite reaching it. Okay, so price has impulsed towards your target, but not reached it. And then what you're looking for is a retracement. After London session, price should retrace into the start of New York. And once we form a low in New York session and you're confident in this higher time frame target, you're going to be looking for an entry down here. Okay, once you get that entry, which I'm going to show you how to do after I show you the cycles, you'll go in to expect price to continue the move in New York, which is why it's called a New York continuation, because you're simply looking for London to push and then for New York to continue the move until that higher time frame target is complete. Okay, and the same thing goes for the bearish version. Let's say you have a higher time frame target down here, some kind of external or internal range liquidity. What you're looking for is for London session to move towards that target but not quite reach it. And then in between sessions and in the start of New York, you're looking for price to retrace. And once you get that retracement and price forms a high and gives you an entry signal within here, which again, I'm going to show you how to do, you're going to take your position and expect New York to run towards that higher time frame target. So again, it's pretty self-explanatory, this one. You're looking for London to impulse and then for New York to continue that move, right? And you're going to take your trade in New York. Okay, now this third daily cycle that I'm going to be showing you is called a New York reversal cycle. Okay, and what you're looking for, we'll start with the bullish version. Now, unlike in the New York continuation, price is actually going to sweep out London's low, right? We're actually looking for London's low to be the liquidity for the move higher. So you're going to wait for New York to take out London's low. Okay, and then once price forms a low down here and gives you that entry, you can expect that New York will now impulse towards the higher time frame target, right? So you're seeing with these daily cycles, by using the kill zones like this, you're able to time the expansions very well down to a 3-hour period within the day, because that is what the kill zones are, right? It's a 3-hour period. Now let's talk about the bullish version. It's the same thing. So let's say, for instance, you have a higher time frame target down here. We're looking for London kill zone to be the liquidity that gets taken before price moves to the target. So again, we're looking for New York kill zone to open up and run higher, right? And take out London's high. Once we get that and we look for our entry and get the entry, we can be confident that New York session is now going to impulse to the downside towards the higher time frame target. So let's get into some examples of these cycles. So this first example is on Euro USD. First of all, I find a clear external range liquidity or internal range liquidity target. Down here, we have this old low. Okay, that is clear external range liquidity that price is moving towards. And if we go down onto the 4-hour, you can see that the 4-hour is bearish, right? It's in line with this target, which is what we want, because we've formed this bearish order block here. These last two up candles got closed beneath, so we're forming bearish PD arrays. And we're also respecting them, right? Because price tapped into the order block and moved lower. And then we went and formed this bearish order block here, right? These last 3 up candles here, that's another order block. So we're clearly forming and respecting bearish order flow on the 4-hour towards the target. So now we can look for one of those daily cycles. So I'm here on the lower time frame, and this blue box is Asia kill zone. Now, one of the daily cycles I just showed you was called London protraction, where Asia kill zone gets swept out by London kill zone, and then we get an impulse towards the higher time frame target. So if we look at Asia's high, right, you can see that this high has clearly been swept out. And if we look at the timing of it, okay, you'll see that this black candle on the end is 7 a.m., which is the start of London kill zone. Okay, so if we think about that London protraction cycle, this is setting up perfectly. Asia kill zone's been swept, the highs formed at 7 a.m., the start of London kill zone. This is where you'd get your entry, because now you'd be expecting London to impulse towards that higher time frame target, right? You have timed the impulse very, very well with this daily cycle. And I'm going to show you how to get those entries once I show you these examples. So if we play out London kill zone, you can see that price melts off towards the external range liquidity target, right? Look how perfectly timed that impulse is. So the next example I want to show you is on gold. Okay, so first we find the internal or external range liquidity target. We've taken out this old high up here, which is external range liquidity. Now it makes sense to target internal range liquidity. And we have this FVG down here, which is internal range liquidity. Okay, so we have a clear IRL target. Now we need to make sure that the 4-hour or the 1 hour is forming bearish order flow towards that target. So if I jump down onto the 4-hour, you can see that these last three bullish candles got closed beneath, which has formed a bearish order block. Now, this bearish order block formation is a telltale sign that price is now bearish, right? Price is in a sell program, which means the 4 hours onside, and I'm happy to take a trade in the direction of this internal range liquidity target. So now I'm here on the 15-minute, and this purple box is London kill zone. And as you can see, we've had a pretty aggressive move to the downside in the direction of the internal range liquidity, but price hasn't quite reached it yet. Now, if you remember the New York continuation cycle, you'll remember that London impulses towards a target, then we should get a retracement, and then New York should continue that move towards the internal range liquidity, right? So that's what we're expecting. We're looking for a retracement, and then for New York to form a high, and then to catch that move to the downside. So if I play this out a little bit, you'll see that New York kill zone begins, right, which is this yellow box, and we get a retracement, and that would be into this 1 hour FVG here. Right, so we get a retracement into a bearish PD array. From here, we would expect price to continue to run to the internal range liquidity target. And the confirmation for that is when price presents the entry model, which I'm going to show you in a second. So now we've had the retracement, price should continue to run towards the internal range liquidity. And as you'll see, we get that run to the downside to the target. Again, you can see how perfectly timed the expansion is using this daily cycle. So this last example before I show you how to actually get the entry is on GBP USD. Okay, so first of all, we need to look for either internal or external range liquidity to target. And price is moving to the upside on the daily. We've just had a retracement. So the next target realistically is going to be this external range liquidity. Okay, so that's what we're trading in the direction of. We just need the 4 hour or the 1 hour to be in line with that target. So on the 4 hour, you can see that these last 4 down candles got closed above, forming a bullish order block. Okay, so price is in a buy program, which means the 4 hour is bullish. Okay, you can see that even following that, we formed another bullish order block with this last down candle that has also been respected to the upside. Okay, so the 4 hour is bullish, which is in line with the target. Now we can look for a daily cycle. So I'm here on the 15-minute again, and we're looking for a bullish daily cycle to take us towards the external range liquidity target. And if we look at London kill zone, okay, unlike in the continuation cycles where London impulses towards our target, London kill zone has actually retraced, right? We've actually had a bearish London kill zone. So we can't play that New York continuation, but we're still very confident that price is going to move towards this target. And the fact that we have left this old low down here as well tells me that we could get that New York reversal cycle if price takes out that low. So if I play it out a little bit, you'll see this yellow box is New York kill zone, right? And it has swept out London's low. Now this is the start of that New York reversal cycle, right? We look for New York to take out London's kill zone and then impulse towards our target. So this is where you would be looking to get your entry. You'd be looking to get your entry and expect New York kill zone to run towards the target. Now, one thing I didn't actually tell you about these New York reversal cycles, and this is only for New York reversals specifically, they can actually run past the end of New York kill zone. So instead of it just being from 12 p.m. to 3 p.m., New York reversals can actually run until 5 p.m. So that's the window that we have, right? We can actually hold this trade until 5 p.m. So you would go ahead, look for your entry, and then hold that until we either reach the target or until 5 p.m. If I play this out, price presents the entry, which I'll show you in a minute, and then we run towards this external range liquidity target. And if we find 5 p.m., it is this candle here. So you can see that price until 5 p.m. ran very aggressively towards the external range liquidity. So again, we're timing these expansions with high accuracy. And that's just 3 of the daily cycles, where I personally use 8 of them. So if you wanted to learn them all, I've put together a 4-month program called the Daily Cycles Program, and you even get a 7-day free trial, so you can start it today completely for free. It also comes with 6 in-depth technical courses. So if that's something you'd be interested in, I'm going to leave a second link in the description where you can activate your 7-day free trial. Now let me just run you through how I would go about getting the entries, and then I'll leave you alone. Then you can go away, okay? So when it comes to the entry, I'm simply looking for a CSD, right? So a change in state of delivery. So if I rewind this, I'm essentially looking for price to switch from the bullish order flow that swept the liquidity. So as price moved to the upside and we took out the liquidity, the order flow was bullish. I'm looking for this to switch to bearish order flow, and that's where I'll get my entry. So you can see here, after taking out the liquidity, we got this bearish candle, and that bearish candle has formed a bearish order block, and it also closed through this bullish FVG here, right, forming an inverted fair value gap. So price has gone from forming and respecting bullish arrays in bullish order flow now to forming bearish PD arrays, which tells me that the bearish order flow has started. So once we get this CSD, I will enter off of any bearish PD array and ride the move down to the target. So I entered off of this inverted fair value gap actually. Maybe if I can find the execution, I'll put it on the screen. And yeah, I literally entered off of there, and my target was the external range liquidity, and I just held the trade, right? You can see that we tagged the entry and then we run towards the external range liquidity a little bit after London kill zone. The same thing goes for this New York continuation example. I'm simply looking for this bullish order flow, right, that formed in the retracement to switch to bearish order flow, then I get my entry. So you can see here, price was moving to the upside, and then this bearish candle formed a bearish order block. Okay, this one's literally the exact same as the one I just showed you. It forms a bearish order block, and we also form a bearish inverted fair value gap. So again, that shows me price has gone from forming and respecting bullish PD arrays now to forming bearish PD arrays, signifying the start of the bearish order flow, which is when I get my entry. Okay, so I simply would have entered off of the inverted fair value gap, stop loss at the high, and go to target this internal range liquidity. Unfortunately, I missed this trade because it moved pretty quickly and I didn't get another entry, but you can see it tap the entry and then it runs all the way to the internal range liquidity target down here. Now the last one, the last entry example, and then we're done. So on this New York reversal on GBP USD, we're looking for the exact same thing. We're looking for that change in state of delivery that shows us that price is now going to move towards our target, right, after taking the liquidity. So down here we had a bearish move, right, through the liquidity, and we formed this low in New York. Now we're looking for that switch, and these last two down candles got closed above. Okay, and that formed a bullish order block. That shows us now that price is forming bullish PD arrays, which signifies the formation of bullish order flow. So you could simply enter off of that order block, stop loss can go at the low, and this one you can hold until 5. Right, because this particular cycle can run until 5, you would just hold it until then. And as you can see, it ran very nicely. It was at least like a 1, 2, 3.5. Every single trade in this video and every single trade I personally take can be identified by following the same 4 simple steps. And I've gone a step further as to put those 4 steps into a free PDF for you. Now within that PDF, you'll also find a flowchart to identify the daily cycles. You'll also find another PDF within there that gives you a couple tips and tricks on aligning price with time, just like the daily cycles do. Now to access this free PDF, it's going to be the 3rd link in the description. So you have the top link, which is the free Discord where I put predictions and whatnot. The 2nd link is for the 7-day free trial for you to learn all 8 daily cycles over a 4-month period. And the 3rd link is going to be for that free PDF. I hope you found value in this video, and I will catch you on the next one.